The zero interest rate program of incredibly low rates really did the most harm, and that's just all on government. Let's say the West. It happened in Europe, it happened in the United States, it happened here, happened in Australia, New Zealand. Ultra low interest rates, then COVID hit, and so the interest rates were really low. In 2019, central bankers started scratching their heads saying, well, it's been a long time since 2008, 2009, when there actually was a crisis. The interest rates are still low 10 years later, for Christ's sakes, and we got to start raising them. So they started raising interest rates in 2019. And sure enough, boom, 2020, there's COVID. Well, interest rates used to be really low. Now they got to go to zero. We're going to take prime rate down to 1/4%, which is effectively zero. We've watched what happens since. So as night follows day. So there's a number of different impacts. My criticism of all this is always the same. 25 years ago, the average selling price of a home in Ontario and British Columbia, it had actually edged up in British Columbia, but in all of Ontario, the average selling price of a home was very close, between 2.5 to 3 times average family income. That's what it was. Those were the relationship ratios back 25 years ago. You had a chance to buy a house if you're an average income earner, because it was 2.5 to 3 times was the cost of the house. Today, it's between 8 and 10 times. So you're screwed. And average people just starting out, unless they receive a massive parental gift, it's just not really possible for them to have any rational hope of homeownership. 10 times income doesn't work, particularly at these interest rates. It really doesn't work. So that's my whole thesis of what's wrong with house prices in Ontario and in British Columbia.